2026 is not just another year in the stock market, it's a reset year. After years of inflation fears, rate hikes, AI hype, and market volatility, investors are asking one big question. Where does the real opportunity lie in 2026? Here's the truth. The stock market in 2026 will reward patience, strategy, and long-term thinking, not quick gambling. First, let's talk about interest rates. By 2026, most analysts expect rates to stabilize or slowly decline. And historically, when rates stop rising, stocks, especially growth stocks, tend to perform better. That's good news for long-term investors. Next, artificial intelligence and automation. AI is no longer hype. In 2026, it's infrastructure. Companies that use AI to reduce costs, increase efficiency, and scale faster will dominate. This includes tech giants, but also healthcare, finance, and even manufacturing companies quietly using AI behind the scenes. Third, dividends are making a comeback. In uncertain times, investors look for cash flow. Strong dividend-paying companies with solid balance sheets are expected to attract serious attention in 2026. Stability will matter more than flashy promises. Now here's what not to do. Don't chase viral stocks, don't panic on short-term drops, and don't invest money you'll need next year. The smartest move in 2026? Consistency. Invest regularly, think long-term, let compounding do the heavy lifting. Remember, the stock market doesn't transfer money from the rich to the poor. It transfers money from the impatient to the patient. 2026 isn't about timing the market, it's about time in the market. And those who understand that will win.